Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 7th of October, 2023. And this is the weekly technical analysis for spot gold and dollar yen for the second week of October. And back after a short break of 3 weeks, effectively almost a month since my last analysis. So let's see whether anything has changed drastically. Looks like the US dollar has strengthened throughout the period, and with the spot gold falling hard at the end of September, while the Japanese yen has weakened and the dollar has strengthened over that, and all the way up to finally hit the critical round figure at 150 before any significant pullback. So let's review the last month, see what were the key factors that drove the US dollar stronger, and have a quick outlook for this coming week, see what the fundamental drivers will be. So since the beginning of September, the second week, the ECB did raise interest rate, and by quarter percent, 25 basis points, but it was a dovish hike with likely pause after this. And no surprise with the Federal Reserve, they continued to hold, but still with a caveat that they may continue to raise interest rates later on, depending on the data. However, the Bank of England did surprise and held their interest rate. They did not increase, and after 14 hikes, and seen to be a dovish pause here. And as usual, the Bank of Japan, still no change, no action from the central bank, and very dovish, which caused the Japanese yen to weaken further, but we'll see in the another video with spot gold and dollar yen. And then the core PCE price index did come in slightly lower than expected, so inflation figure was slightly lower. And then for last week, the RBA still held their interest rate at 4.1% for the fourth month, and also seen as dovish. And on non-farm payroll yesterday, the jobs was very strong. Jobs added was strong. So the jobs outlook for the economy is still very strong, which could be a concern for the market, as the Fed may use that as ammunition to raise interest rate for another round before the end of the year, and could extend their possible rate cut out another year. So almost double the forecast here. So this coming week, there's PPI and CPI data for the US, and the forecast, a lower forecast compared to the actual higher figure for the previous month. And the UK GDP figures also coming in, and then some minor news on the consumer sentiment. So this coming week, we'll likely see some continuation move. It could be some recovery for the majors as the US dollar pulls back and possibly consolidates. Right, so let's go back to the analysis. Let's begin with the spot gold here. And after a earlier attempt to retest the 1950, that was the key resistance level. And after forming a double top, fell below the neckline near the daily 200 EMA, and then just collapse all the way down below 1815, below the 200 pip extension, before finally recovering yesterday. News from the non-farm payroll report after initially dipping lower, then managed to bounce back up. So we'll see how strong this recovery is going to be. There should be some recovery after this significant drop here from almost 1950 to 1815. So that's almost a 1,300 to 1,400 pips here. Let's take a look on the weekly time frame. I did drop to the low of 1810, just above 1810, 1810.43. Let's mark that level. In 1043 and change that to magenta here. Weekly time frame doesn't look like a strong recovery, unlike the euro and the cable with which form hammers. So there could be some consolidation this week, and still a risk of dipping lower, and perhaps it's still attempting to try to get close to 1800, previous swing low here. It's at 1804.75, so around the 1805 area. So not a convincing bounce back up. So let's mark the key support here. Key support is going to be at the 1800. That's going to be very significant support here. Resistance is going to be likely above this 1850. So let's mark the 138 pip extension. And a possible intermediate resistance at the 162 along with the 1850 area. Right, so critical week for spot gold for this precious metal with US data coming in midweek. But as it gets closer to 1810 to 1805, then there should be strong buying demand for strong move back up. So watch out for that. If we prepare for this potential recovery, we can also mark this drop and climbing back up to 38 pip retracement. We can mark the intermediate at the 1850. And actually potentially should try to recover 50% just above the 1875 area. But we'll leave it for now with that to see whether this is going to be a swing low. Not sure yet. If it doesn't hold, then it could dip into the 1800. Okay, so let's compare this with the US dollar index. And here's the DXY, the US dollar index, where it did continue to climb higher above the 105, which was a significant round figure resistance from previous, and almost hit the 107 level, climbing up over 200 points here before retracing and pulling back into the 162 fib extension. And this fib reversal swing has been there all along, and it did not reach the 200 fib like the euro, but yeah, it was just shy of the 107 round figure. So we'll see if this week there's going to be a continuation move or perhaps also consolidation, and this possibly also could turn out to be a potential head and shoulders and a return back to 105, or perhaps the 138 fib extension. Let's take a look on the weekly time frame as well. And yes, after strong bullish move, it did form a kind of a shooting star for the week last week, and we'll see if that's going to cause a reversal or at least a significant retracement, and that's possibly going to pull it back down to the also the weekly 55 EMA at the 100 fib swing high, similar to the euro. So that's all the way back down here. But for now, let's mark the 104 round figure as a significant support. There's another intermediate support at the 138 fib. Major resistance at the 107. Okay, so we'll see whether it's CPI data will create any opportunity for further strength, or whether it's just going to peter off as the forecast is for a lower figure. So this could allow the US dollar to pause and take a breather and let the majors to recover as well. Okay, let's move back to the other pairs. Let's take a look at the dollar against Japanese yen. It did break through this significant area of support or resistance, now holding as support after that dip, which on Tuesday looked to be a potential intervention. Not sure whether it was, but there was a strong sell-off after hitting the 150 round figure, and that dipped over 270, 280 pips. If we take a look on the 4-hour time frame, that's the one where after spiking through the 150, fell 280, 290 pips all the way back down towards the 4-hour 200 EMA. That was at the, I believe it was 10 p.m. Asia, Singapore time. Yes. So that's around 10 a.m. US Eastern. And this zone of resistance, that was the one identified from this previous key area, the doji. Let's see whether this is going to hold as support. So let's mark this as a support zone now. Next key support is going to be at 146, where this previous swing low was. So move this intermediate one, and the resistance is still at the 162 fib, just at the 150 round figure, and 162 fib was at the 149.91. So that's the fib reversal extension here. So let's see if it's going to attempt to break through the 150 again, or if it's just going to form a double top and potentially retrace back down lower. In tandem with the US dollar index. So critical week next week for the US dollar to see what the price action is going to be for the DXY as well as dollar yen. On the weekly time frame, yeah, it's not a convincing bounce, and we'll see whether it is going to be in hanging man type of formation. Okay, so it has gone on an extended run, so it's likely time for pullback and retracement, and a significant retracement at that. right? So we'll see over the next couple of weeks how this US dollar performs. And do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.